please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back to Trading Hour, and we begin Trading Hour with a bang. We have with us absolutely the man of the moment, the Managing Director of Bank of Baroda, PS Jayakumar joins us. Good morning, Mr. Jayakumar. Thank you very much for joining. I know it's an extremely busy morning for you. But first up, when did you get to know of the merger? Yesterday at the press conference?
No, we have been part of discussions at varying points of time with respect to the potential choices and how should we go about it. So, but beyond the point, it's difficult to share my conversation with the government.
Okay. Mr. Jayakumar, what is the next step? I mean, can you give us some idea of the timetable by when you will have a merged entity?
So the way the things should move forward from here would be to have the board meetings of the various banks, of the three banks convened, and then take a view on the request made by the government. And then there is the usual procedure relating to assuming that goes forward. Then the next step would be obviously to go forward with the process relating to the appointments of investment bankers, valuation, and all of that stuff. Then arising from that would be a stock swap ratio, which is the first point that we need to agree upon. Those stock swap ratio then has to be approved by the respective boards. Then there is a scheme of consolidation that is drawn up, and that has to be presented before both houses of parliament for 30 days. And then the process relating to the final leg relating to the legal process relating to the consolidation will get completed.
Okay. So clearly there is no scope of going down the open offer route.
No, there is no open offer here because what is postulated is stock swaps.
Okay, it's a stock swap. Has any decision been taken on the record date?
Not really. First, let the board meet, and then we'll have to take all this.
No, I mean, these become relevant for your investor audience because a record date today and a record date of yesterday is a vast difference, and a record date of day before yesterday would be very big. So I would assume that is kept in mind.
I'll get back to you quickly on that aspect.
Okay. All right. Who heads the merged entity? Have they invited you to do that? So
that's about us. I mean, the merged entity will be decided. It's reasonable to assume that the person who would lead Bank of Baroda would be in charge of the merged entity. But all of these things are open for discussion.
Okay. And you haven't been told. I mean, October is upon us. October is upon us.
Put it this way: I have communicated to the government that insofar as I'm required to continue, that is available.
Okay. Okay. No, that's good to hear. As far as your continuity is concerned, you are available.
That would be correct position.
Okay. Okay. Mr. Jayakumar, now tell us, what do you see as the major integration problems? What will fill your time from now to the next 12 months?
Okay, let me try to put it to you in a couple of ways. One is that, the stock correction is particularly Bank of Baroda stock, and the concerns that usually come up from all of these things is, would there be a distraction of energy at this point of time from the activities we are involved, the growth path we are showing on one side? That's a concern. And second is really around whether capital will be available if indeed such additional capital is required, because otherwise Bank of Baroda would have gone to the market to raise funds. Now with the merger on, we may have to choose a different time. And the third issue is around a more long-term issues, whether the potentials of synergies can actually be realized. These are the three broad kind of issues that are there, I think. As far as the business is concerned, we're going to do our best to make sure there is, in fact, no disruption. There is a theoretical construct around how integrations are conducted. There will be a special set of team that will be working. And we are expecting the rest of the organization, whether it is Bank of Baroda or Dena Bank or Vijaya Bank, will stay focused with respect to the respective business goals are concerned. As far as the capital is concerned, you heard the finance minister yesterday, you heard the secretary yesterday that adequate capital will be provided for growth.
They have promised you more capital? Has the government promised you more capital?
Yes, that was, I mean, if you saw the presentation, it's very clearly there, capital will be provided. And it was again emphasized. And the third aspect of it is really the synergy and the integration around it. That's a little bit long term. We have to be thoughtful about what we do. And I do think there is reasonable, there are many reasons to believe that this indeed should turn out favorable. So if you were to look at it broadly, it is the combined organization is much geographically much better represented in the markets we like to be present, which is if I were to take Maharashtra as a case in point, Bank of Baroda is 505 branch. Combined entity will have 1,009 branches. If I were to take Karnataka, for example, Bank of 121 branches, the combined entity will have 796 branches. If I were to take Gujarat, for example, our position is 1,007 branches. The combined entity would be 1,744 branches. And so on and so forth. So I think in the states of Andhra Pradesh, in the state of Karnataka, in the state of Tamil Nadu and Kerala, where Bank of Baroda is relatively underrepresented, and Telangana, the current merger would help the combined entity to have a much more distributed branch structure presence. So I think that would be a case of the complementarity that is going to be. So in fact, I'm saying that the synergies have to be realized. There are some obvious benefits that are there, and that's something that's a bit medium term as we speak about it.
So my colleagues Sonia and Ekta are also with me. I just want to finish this one capital point you were making. Any indication how much?
So here is what it is. The board would meet, and then there would be a response to that, the government thing. Around that time, I would think we should be able to think through, if at all, I mean, around that time is the earliest time we'll be able to think through what would be, whether capital is required. But let's just look at the numbers as they are, leaving aside the immediate question, capital will be available. Now, before we went, Bank of Baroda on a standalone basis has a CET1 of 9.27 as of 30th of June 2018. If this combined entity was in existence as of 30th of June, the CET1 ratio, for example, would be 9.33. If you were to look at, for example, the coverage ratio, what we call a PCR without taking the TWO, the Bank of Baroda on a standalone basis is 59.94. The combined entity would be 57.14. So if you were to look at the total capital, which is Tier 1, Tier 2, CET1, etc., Bank of Baroda as on 30th of June is 12.13. The combined entity would be 12.26. So I think there is enough headroom for the time being to continue to keep growing. Then assuming the gross profits and the margins and other things kick in as we've been talking, then I think there is a certain amount of freedom of action with respect to existing capital. Now, over and above that, what we need is something we need to work. But assuming this merger was not going to take place, the Bank of Baroda would be probably approaching the capital market probably in the third or the fourth quarter. Not because it is necessary, but because we think that would be an appropriate time to do it. But that's really where the broad plans are. So there is no immediate urgency that capital should be infused. There is adequate the numbers are so that we are in a fairly good position. So we'll continue to grow.
So, Mr. Jayakumar, you said the coverage ratio will fall from 59.9 to 57.14, right?
I'll give you the exact number. Yeah, something in that region, 59 to 57, correct.
Okay. Any other dilutions of the operating ratios? I mean, what happens to the CASA post the merger?
The numbers are as follows. Prior to on a standalone basis, Bank of Baroda is around 40.82 or 41%. The combined number would be about 38%.
Okay.
So I don't think, I mean, see, this 1 or 2 percentage movement is, happens even in a normal course.
Sure. No, I get that.
So I don't think, but it's probably more sensible to talk about aggregate numbers rather than percentage because you can run down some deposit and improve some ratio.
Will there be any
for
uncertainty? Will there be any uncertainty relating to recognition of NPAs going ahead? Because the fear is that the NPA coverage of Vijaya and Dena Bank is much lower than that of Bank of Baroda. So when the merged entity when the merger takes place, how would the recognition of NPAs move on?
So one of the things we have to keep in mind is to look at Vijaya Bank's coverage ratio. It tends to be far more retail in character. That is also far more secured. And if you're looking at a larger number of mortgages and those kinds of stuff, you're not running into a binary situation as you sometimes run with the corporate loan portfolio. So that probably explains why the ratio might be, although lower, might be sustainable. But that's something that that I haven't really had more data, but I'm just making an observation broadly that if you're very retail in character, very granular in character, we can work with less coverage ratio. Relative to
fair point. No, but Mr. Jayakumar, the bigger issue is when SBI merged with the babies, they used that as a reason to kitchen sink. Yours is coming, I guess, after a big AQR. Will there be such nasty shocks?
I think we're jumping the point. I would just say this by way of defense that when the SBI merger took place, it was a little behind in time.
Yes.
And the Reserve Bank of India and the government and the banks, boards have been working hard to make sure there is full recognition of the problem provisions being made. Due to this process, the AQRs and all of that stuff, and then the fact that the aging provisions have increased over a period of time, I think in general the situation is not exactly comparable.
Okay.
I think we are better placed today than we were before.
No, that is the guess of the market, but I still thought I would check with you if there would be any such fears, but you think they are unfounded?
I would think that by and large, I think I would expect the coverage ratios to be adequate, but assuming indeed there is a need for incremental provisions to be taken, have to be taken. Remember also there is a fair amount of operating profits that are coming in from two of the three entities.
Okay. Mr. Jayakumar, just wanted to actually ask you about that point with regards to retail and corporate. Going forward, in terms of the consolidated loan book, what might it break up as in terms of exposure to corporate as well as retail?
I would broadly say that it will be a far more distributed book, both in terms of geography and there will be far more retail and granular component. The Dena Bank is also weighted in favor of MSME and SME space. As far as Vijaya Bank is concerned, it's weighted in terms of retail and MSME space. Bank of Baroda is a more corporate portfolio. So I think as we look at it, it would be a more diversified portfolio. And that diversification would also extend to geographies as well.
Bank of Baroda's NPL recognition policies are much stricter than the other banks. Do you think your bank will recognize more NPLs, especially from Dena's books, post the merger, because of the large MSME portfolio that Dena has?
I would put it to you this way, that what is appropriate and right needs to be done. But I really don't want to speculate because I really do not know. I do not want to comment on something on which I don't have full details. Okay. We should be conservative with respect to provisions, with the general position. Okay. And therefore, for us to reverse the provisions we have taken because the provisions elsewhere are kept in a different standard is unlike. That's something that we need to discuss as we go down the line.
Okay, there are a bunch of brokerage reports in front of me, and people like Credit Suisse and Deutsche Bank have worried about the merger and downgraded the stock or kept it on hold, downgraded the target price, simply out of the fear that the management's bandwidth, the managing director's bandwidth, will be devoted to merger issues, and therefore the good growth that BoB has shown may not be kept in the coming quarters. Is that a legitimate fear?
So I think the way you usually do these exercises is that you have dedicated teams that works with respect to the merger process. You normally set up a steering committee with appropriate staffing and an equitable representation that can then focus with respect to the merger, and that's precisely what we will do. As far as my own time is concerned, surely this is a new item that would require some time, but it's also equally true that Bank of Baroda on a standalone basis is pretty much moving fast on its own trajectory, and therefore the fact that we have built the bench strength and we've built the processes and we've built the momentum, I expect them to continue.
Do you know what was the rationale behind the government choosing these three banks? And there is a fear that there could be round two where other banks could also be aggregators. Any thoughts on that?
I would put it to you this way, that as far as the current set of equations are concerned, Dena Bank and Bank of Baroda and Andhra Bank is concerned, just as I took you through the distribution of the branches and we discussed the portfolio, this obviously is an arrangement that achieves the objective of focused growth in key geographic market. That's very clearly coming in, and a more diversified customer base and a diversified portfolio. So it is that. And the second thing, which I think was alluded to by the FM as well, was that, the Reserve Bank of India and all been in consultation. So I guess a lot of mind has been applied around the issue of which banks to be brought in at this point of time. Obviously, we were also consulted before, and there has been a discussion with me and others on the same subject. So I think, to me, it seems that this combination is a well-thought-of combination because it gives the combined entity presence in certain geographic market we want to consolidate, and an extension to certain geographic market which are high-growth markets in respect of which we are not present, but Vijaya Bank is present with a high level of concentration.
And you
As
all...
the second question is concerned relating to what might happen in future, I just think you need to ask this question to the government. I can't answer somebody.
And Mr. Jayakumar...
But it is important that we make this into a big success so that it then provides a more comfortable reason for further consolidation, which is part of the reform, articulated reform agenda.
Yeah.
Okay, and Mr. Jayakumar, you didn't have any reservations on taking on a Dena bank, which is much worse in terms of asset quality and the asset book, and was under prompt corrective action by the Reserve Bank of India either. You didn't have any reservations there.
Well, let me put it to you this way, that the scheme of identifying the branches has gone through a number of discussions, and the government has obviously thought through all of the points that you have raised while coming back to this conclusion. And surely the boards of the respective banks would also give serious thought to all of these items. So, but one of the things that I feel more positive about today than I would have felt a year before is that because of all that has happened in terms of identification of non-performing assets and the increase of coverage ratio, as a matter of fact, Dena Bank is in a better position in terms of coverage than it was some time back at a 57-58% ex-TWO. I think those are good numbers we are talking about.
Okay. Well, just a final ratio I wanted to ask you, Mr. Jayakumar. Your ROA was plus 0.3. The merged entity will be minus 0.03 or thereabouts. Can the combined entity go into, similarly your ROE also will become negative. Can you all get into positive terrain bang in the first year, that's say FY20?
Well, that would be the endeavor, but I really don't, it's kind of premature now for me to comment upon the ROA, but the objective behind the merger, and that's important, is not about just getting three banks together. It is about the fact that the three institutions combined would be more than the sum of the parts.
Okay.
So that's really what it is, and now it's up to the management team and everybody else to get the act together and make sure it happens. So I think that's very much the objective. Now, whether it happens in the next quarter, the following quarter, I would not comment, but I think we should do better combined than as individual institution.
Just a ballpark date. The combined entity is this fiscal itself? You think it's possible?
It is possible, but not definitive.
Okay. And how long, realistically, do you think it could take for all the merger-related issues to get ironed out?
I don't understand your question fully.
For all the integration, to take place, how long do you think it could take?
No, as we've been discussing, we're looking at, if you're talking about a single vehicle coming into existence, combining these three entities, I would think that probably is going to take 4 to 6 months' time.
All right. Mr. Jayakumar, pleasure speaking with you and all the very best for hopefully leading the merged entity as well.
Thank you so much.